Korea has not had too much to get excited about in recent years, but the buds of a slow recovery may be sprouting. In its monthly assessment of the domestic economy, the finance ministry said key economic indicators like consumption and output are picking up. Kim Min-ji has the details.
The signals are weak, but showing signs of recovery. That's the finance ministry's diagnosis of the Korean economy. In its monthly Green Book report released on Tuesday, the ministry said the pace of increase in employment has slowed and consumer prices are down due to low global oil prices, but overall major economic indicators such as industrial output and consumption are steadily improving. The report shows private consumption rose 0.6% in the first quarter of this year from the previous quarter, while it rose 1.5% from a year earlier. Department store sales edged up 1.5% in April from a year ago, while credit card transactions jumped over 15%. Domestically produced vehicles saw a nearly 3% rise in sales last month from a year ago, while gasoline sales rose around 9%. Industrial output went up nearly 2% in March from the previous year.
To some extent, the gains can be attributed to a base effect from last April's ferry disaster. But three key rate cuts since last August and government stimulus measures are also supporting the slow-paced recovery that will likely continue into the second quarter.
However, the expert also pointed to the weak Japanese currency and delays in the recovery of major economies as external factors that could weigh on the economy moving forward. Those factors have already lowered the competitiveness of Korea's exports, once the pillars of the economy, and data shows that exports fell more than 8% in April from a year ago. Kim Min-ji, Arirang News.